Oh my goodness, is the stock market recession over, or is it just getting started? We have the first green day in what feels like 10 years, when in reality it's just been like a week or so. But today, first green day, everybody's doing well. The market's kind of slowly possibly coming back. We got a lot of buying pressure because of the European Union coming out and saying, "Hey, let's negotiate these tariffs so, we can all benefit each other." So guys, I hope you guys all enjoyed this. If you do, smash that like button, subscribe. And if you guys want to learn more about trading and investing during into the stock market, check out our school. For those of you that are new to the channel, my name is Carter. I'm a full-time 7-year trader in the market. We specialize in swing trading, so holding those positions for, 1 to, 14 days on average. And we teach people how to find these undervalued stocks or strategies, approach, all that good stuff. So check it out down below, and you guys can get 51% off by using code SPRING25. So I'll see you guys in there. Check it out. It's 51% off. So come on, check it out. All right, let's jump into this. So as of right now here, we did get in on 2 new positions here as of not one after hours, but one position we got in before market close yesterday, and then one position we got in on early this morning here. So right now we're holding a variety of companies, about 1, 2, 3, 4, 5, 6, 7, 8, and a couple of ETFs. So, about 5 individual stocks. So let's start up top. So we bought in and we're averaging down. So in my opinion, I think the best strategy for investing during these tariffs and uncertain times is to dollar cost average. So dollar cost averaging is an investment strategy that involves investing consistently rather than just dumping a bunch of money in right now. Now, the reason I say that is the last thing you want to do is, average down. And even if it's sold off down, with Meta here, it's sold off, that's just say, 15%, you go, oh my goodness, okay, let's just dump a bunch of money in on it, when in reality it's sold off, all the way down 33%. So dollar cost averaging, you invest as it sells off. So what this does is it brings your average down. And once the market recovers, your average cost is lower, so you'll make a little more money. Also, another little pro tip, anytime the stock or ETF that you're investing into sells off more than 6% in like a week, double what you normally will put in. So if you normally put in $100 a week, go 200. This will help you dramatically bring down your average cost. So once it recovers, your cost is lower. So, all right, let's talk about some stocks here that we are holding. So Meta got in because of that sell-off, but more importantly, I think that Meta does carry so much long-term potential. If we look at like the financial statement, you guys can see, yes, the stock sold off 30%. But the total revenue is up 22%. The gross profit's up 23%. So operating profit is 48%. So yes, the stock sold off. On the previous earnings report, we had huge buying pressure followed by it. So I think that this just represents a super undervalued point. Another stock here that we got in on was Berkshire Hathaway. Berkshire Hathaway kind of was on a little bit of a trend line, but more importantly here, it hit that 200-day moving average line, which really acts as heavy support for the stock here. And this is kind of where we originally saw it. It sold off like crazy from $540 all the way to $460. Looking at that hourly time frame here, one of the things that we were looking for is a new possible trend here. So we're going to start averaging down with this one here. Looking at like some other time frames here, you guys can see it's using a little bit of some moving average lines as support. So we could see a little more, going in that upward direction, which is good. We got VU, Vanguard, S&P 500, all the icons: Apple, Nvidia, Microsoft, Amazon, Meta, Google, Berkshire Hathaway, all these other fantastic ones. So you probably say, well, Carter, why would you invest in a VU over individual stocks? So VU is just tracking the general market. When you invest into individual companies, the risk is definitely a lot higher. So, for me, VU, averaging down as the market sells off, historically has been one of the best things for investors, for traders. And yes, people say, well, Carter, it could take, a year before we see profit. Well, yes, I'm well aware of that, but I would rather have profit in a year, almost, I don't want to say guaranteed, because nothing's guaranteed in this world, but looking at previous data, right? If you invest during recessions and hard times, historically, that 1 year after, it's about a 21% return. So yes, I will gladly invest into the S&P when it's down any day of the week. All right. And then we got QQQ, which is just more of a NASDAQ heavy, tech heavy, ETF, Apple, Microsoft, Nvidia, Amazon, Meta, Costco, all these other really, really good ones here. This one here sold off even more than the S&P. This one here sold off lows at about 25%, but right now it's down about 20%. So yes, I'm going to average down all day. We got Visa here. Visa is another one that I'm going not super heavy, but enough. Sold off kind of like crazy here, broke out a little bit, hit that 90-day moving average line. But more importantly, Visa has really, really good balance sheets. So like their profit margin is like literally insane. So the gross profit is up 7%. But right now, their net profit is at over 50%. So for every $100 Visa brings in, they profit $50, which is like unheard of. Then we got Amazon here. We got Amazon, Google, and then we got this one here, which is MAGS, MAGS. MAGS is also known as the Magnificent 7 ETF. So it only tracks about 7 stocks, but it has historically had great growth. And given the sell-off here, so the Magnificent Seven here is going to be tracking companies like Microsoft, Apple, Amazon, Tesla, Meta. All these icons that represent the top 7 companies that are in the S&P. So for me, yes, we're buying down, sold off 30%. We're definitely going to take advantage of that and just start averaging in. And that's what's super important about investing and trading during these times is knowing a strategy, knowing your plan. So for me, averaging down, and then for like our swing trades, it's just getting in and out of the position as pretty quick, right? When you're up on your money, a couple $100, we're just going to get out, guaranteed profit. And people ask me, they go, well, why don't you hold it for longer? If the market turns around, you're going to make money. Well, here's the thing. I've never lost money taking a profit. And during these uncertain times, this just brings an extra risk tolerance, a risk level that I don't want to take. So yes, I'm just going to do what I do what I know. And that's what's important with investing and trading. So guys, hope you guys all enjoyed this. Smash that like button. Check out our school. Check it out, check it out. You won't regret it. Private live streams, quizzes, lectures, all that good stuff, and we go live every single week where we talk about positions that carry the most opportunity. So check it out down below. I'll see you guys in there. Like, subscribe, and have a good rest of your day. Take care.